It's 2023 and becoming a Forex trading millionaire has never been more attainable than this year going forward. Why? Is because, well, quite frankly, a lot of different things are happening, not only in the economy, but the world in totality, which of course has a massive impact when it comes down to this particular market. And again, that translates to being able to make a lot of money for the regular investor, regular trader. As a matter of fact, in just the last week alone, we've been able to hit over $40,000 in profit. And just this particular month, we've been able to hit over 80,000. And if I go back roughly 100 days on this particular account, we've been able to clear well over almost 100% on this account. And again, we've been doing this day in, day out. It's a group with myself and other traders as well. It's very interesting to see over the last few years what we've learned, kind of putting our heads together with this little mastermind. So these are 6 particular tips that I want to give any brand new beginner coming into this space that really wants to make an impact, whether it's changing your life or just changing the lives of everybody around you as well. So here are the 6 tips and let's dive right in. Number 1 is all about news. So typically in a bull market, what we've been experiencing for almost the last 2 years, you can essentially blindfold yourself, throw a dart at the wall, and it could land on any type of random pair and you can make some decent capital. But again, there's a lot of different metrics that go into this. And recently we've noticed that news plays a huge factor. And again, it always has, but now more than anything is that the actual news is more fundamentally driven. Thus, fundamental analysis in comparison to technical analysis is what we're really focusing on right now. And the reason being is because there's a lot of stuff happening in the world and it affects the pairs very rapidly. The price movement can be very fast. And if you're able to get inside and in the know on this news, the moment it breaks, you're able to really leverage that volatility, that movement to the upside or the downside, depending on the news. So fundamental analysis is going to be crucial going forward. Now to end this, it's going to be crucial because of how the world economic stance is. And with, it's no secret, us heading into a massive recession, we're going to pretty much drag down the rest of the world. So it's going to be a little bit of rocky times, but there is light at the end of the tunnel and there are individuals that are going to be able to make out like bandits here while everybody else is kind of scrambling around trying to figure out what to do. Again, you're in good hands because we're going to show you everything that we're doing and keep it super transparent. Number 2 is capital and risk management. Now, technically these can be their own category, but it's like a yin and yang here, right? So they kind of work hand in hand. For example, somebody that has $100, if they're aiming for 2% every single day, that's $2 in comparison to somebody who has, let's just say 10,000 aiming for 2% every single day, that's 200. They'll be able to compound a lot faster and see gains much faster. But again, the risk to reward here comes in where the person with $100 is actually going to be more aggressive, thus potentially losing that 100. And the worst part is that these individuals, I see this happening over and over again, is that they'll put in 100, lose it. Then they're like, okay, I'll try with another 100, lose it. Nothing changes because in essence, your account strength has a lot to do with how fast you can compound, also how good you are with risk management. Now, personally, what I like to do is always risk 1% in order to get 2%. So my risk to reward is always 1% drawdown and ideally have a 2% or more swing to the upside. So that's number 2, is try to get more capital when starting off because your account strength is important, and make sure that you set proper risk to reward guidelines for you and your trading style. Number 3 is compounding. Now, again, we all know Warren Buffett said one of the wonders of the world is compounding, and it's true because just like I mentioned before, the individual with $100 and the individual with 10,000, compounding is going to be a lot stronger and a lot more vivid for the person with 10,000 if done properly. Now, it doesn't mean that 100 can't compound. It's just going to take a lot longer to see substantial results, and the probability of actually blowing your account a lot faster than the individual with 10,000 is greater. But again, this depends on also your position sizes, because the person trading 0.01 lot for I don't know, $100 is completely different than the person trading one entire lot with 10,000. So again, just keep in mind, always have that risk to reward like I just mentioned, but compounding is going to be your best friend. If you're gonna go ahead, you're gonna see profits and then start withdrawing your profits rapidly, you're not really going to move the account anywhere. The whole point is just to keep rolling over that money until you get to a comfortable position. Maybe you can take out, or maybe if you want to take out, whatever you want in order to, I don't know, get yourself something nice or go on a vacation, whatever it is. But don't be tempted in the very beginning where if you take 1,000 and turn it into 10,000, you withdraw 4,000 because, hey, you can. I mean, yeah, you can, but it wouldn't be the smartest thing because you want to just let your money, like I said, compound. It's super, super, super vital, especially in this field, to really let your money work for itself and let your money go out there like little soldiers and perform even better over the long term. So use your capital like little soldiers that you deploy to go out and bring back more for you. Number 4, AI is taking over. Now listen, we all know and we've seen ChatGPT and other AI and the AI buzz that's happening right now. But what does this mean exactly? Well, it's actually been pretty cool to see. We've personally been using artificial intelligence trading algorithms to trade for us based on certain algorithmic inputs. And the results have been, quite frankly, astonishing. And I'm not gonna dive too much into this in this video, but if you do wanna learn more, there's a Telegram group down below. It's free to join, you don't have to pay anything. This is where we go ahead and give you news, we give you updates, we'll even show you day-to-day profit on what we're doing, how we're doing it. It's really a place to learn and really expand your skills and us helping you. But one of the biggest things that we're utilizing right now is these AI algorithmic trading bots that are just wiping the average returns that we're getting on a month-to-month basis. And I'm not talking about a few percentage points, I'm talking landslides here, where if we're able to get 10 to 15% every single month just manually trading, which is phenomenal, let me just put it out there, which is incredible. These particular algorithms are able to hit, 15% minimum, where one month we go and maybe make 3, 4, 5%. But again, these algorithms hit 15 and sometimes some months even like 22%, which is crazy. Now, why? Is because due to artificial intelligence, they're able to get in and out of trades faster without having, what do we have as humans? Emotion. Emotions will drive us to go ahead and revenge trade. Emotions will drive us crazy to keep on going, even if we're not in the right mindset, etc. So when it comes to these artificial tools that are out right now, a lot of them are like EAs, expert advisors. Those are just somebody trading. It's still emotions attached, just trading and essentially just reflected onto your account. That's not artificial intelligence. Artificial intelligence is in and out within seconds. And again, if you want to learn more about these AI platforms, how they work, all of that, it's really long, really intricate. But for those that are interested in something more hands-off, this is something that you can take a look at. Number 5 is learning to chart. Here's the thing, is that you don't need to be an expert. You don't need to know every single term. You don't need to know every single pattern. What you need to understand is that if you go ahead and you're well-versed in one particular strategy and you follow that one strategy, there's so many different pairs, there's so many different things you can trade that particular pattern is going to be useful with. So again, everybody's always like, oh, I know how to do all these patterns and whatnot, yet they're not able to be super profitable compared to that one individual who just focuses on one pattern looking for that perfect setup. Everybody's always chasing the next trade, and that's actually not good at all. Chasing a trade is always going to lead to, more than often than not, really bad outcomes. So don't chase trades, and also learn to master one specific strategy that works for you and that you can follow day in and day out and never chase trades. And number 6 is always learn to mitigate risk. A lot of people will go ahead and balance their portfolio later on, is they'll keep 100% of their profit left in their actual account. Now, remember how I said don't always withdraw your profit and just spend it? Well, if you're going to withdraw some profit, you can hedge yourself into something else, perhaps stocks or maybe gold, silver, etc. So you want to start diversifying into safer, or whatever you want, to be quite honest with you. But what I like to personally do is the profits that I make, I like to go a little bit more safe and less aggressive. And again, I don't withdraw or take out profit that's immense and will hurt the account and won't see actual compounding happen because of the amount that I took out. Rather, I'm more so lenient on on the amount that I will actually withdraw. And I set these mental boundaries of what I will withdraw if a certain profit percentage is hit every single month or weekly as well. Some weeks, if I set, hey, I want to go ahead and hit 11 or 12% and I'm at like 20%, then yes, I'll dip a little bit more into the cookie jar here and move that capital elsewhere into safer, longer term investment. And that's actually really, really smart for anybody who just wants to take one thing away from this video. So listen, right down below, if you want to join us in Telegram, it will be very, very beneficial for you. It's 100% for free. You don't need to pay for anything like a lot of other Telegram groups out there. I will be providing you with our entire team every single day, updates and pretty much everything you want to know when it comes to learning more about how to trade this market, news, insights, our profit, and even the artificial intelligence algorithm trading bots that we're using as well. That can all be found in Telegram or in the description down below. If you enjoyed this video and you're ready to go ahead and make 2023 the year that you shine, smash a like and subscribe with notifications, because we're going to be releasing some incredible training over this entire year that you don't want to miss. So with all that being said, bye everybody, and let's get 2023 really pumping. See you guys.